Hey guys, it's 9:30 a.m. The opening bell just rung and I'm going to take you through some trading live. So the market is down today, at least for me, and a big part of that is this Tesla call that has lost nearly 100% of its value by now. I don't think this is going to be in the money. This is going to be a big loss at $260, or it's my full cost basis. I tried to close this at $135 yesterday, just taking a 50% loss, but it shot past that and I wasn't able to close it in time. A couple of things that I will definitely try to be closing today are my Apple debit spreads. So Apple has actually almost fallen below my sell price, but luckily I've already sold a bunch of calls. I only have 4 left. I originally had 8. So this is why you need to take profit early, is because of things like this could happen and you can lose a lot of your value. This is a good lesson that I'm learning though. It's definitely take profit when you're above 50% or 80% max. If you want to wait for the full amount, you're risking losing everything to make an extra 10 or 20%. I actually am going to set a limit order to close. Let's do one at about, so you can see the spread is a little bit bigger because these are debit spreads, so there's just more moving parts in order to close this contract. Oh, this filled really quick. Okay, maybe I don't need to sell it at a loss. Let's do $1. I also want to close these out today, or as much as I can today, just because tomorrow I will be busy. I won't be able to trade all the way up until market close. So this is pretty unexciting. It's been 5 minutes. There's nothing I can really do right now. We can take a look at my other accounts. So my TNA put has gained money, but my workhorse put is definitely losing some money because workhorse continues to drop. So as it gets closer to my strike price, the higher the chance it is of expiring in the money. And that means I would get assigned and have to buy 100 TNA stock at this price at $15. And that's why it's, less and less in the money. And that's why the gain is negative. But luckily, this has an expiration date of October 16th. And options rarely ever get assigned early, so we have a lot of time for this to go green again. If I look at the 1-month chart of TNA, only once has it dropped below 33.5, which is my current strike price. So I should be okay, and as long as it stays above 33.5, I should get the full value of the premium I sold it at, $34.33. Now let's look at my ally. I have 2 Corbis pharmaceutical puts, and they are pretty stagnant. It's strange that one put went up in value so much and this other put lost a little bit of value. Both my Neo puts also seem to be losing a little bit money, and that's because right now Neo is continuing to drop, but I don't think it will drop as low as $16 or $17, hopefully. Yeah, Neo is definitely down today, all the way back down to $19 from its high of $20. I think my put strike prices are fairly safe. I don't think it's going to drop this much, or at least I don't hope it's going to drop this much. And these expiration dates are also pretty far out. This gives me time to weather this downswing and wait for it to come up again. And yeah, that's all I really have for this morning. There's nothing I can really do because favorable positions haven't materialized yet and nothing is hitting my mental stop loss. All I can really do is wait. Actually, real quick, I was looking at my watch list and I am staring at a sea of red. Generally, it might feel not good, but it doesn't matter which way the market is moving when we're trading options. If it's a sea of red, that means there's also a sea of opportunity. What is the good play when the stocks you like are going down? That is to sell puts. The premiums go higher. I want to look for something where we can sell puts that expire tomorrow. And I'm going to sell puts on stocks that I wouldn't mind owning. So even Neo is down today. Let's see how much we could get for a put expiring tomorrow. $22 at $18.50. So if this were to expire in the money, you would have to buy 100 shares of Neo at $1,000, $850. But actually, your price would be this much because you are getting a premium per share. That's pretty good. Let's look at TNA. TNA is down 85% today. Let's see how much selling a put would get us. Not bad. I like to look for puts that hover around the 0.3 delta. $39 return for $35, about a 1% return. 5-er-1s are pretty juicy for a September 18th expiration date. I don't have this much money in collateral, so I think I'm going to go back to Workhorse. Okay, yeah, so I like Workhorse. This is the best opportunity. This is what I can afford right now. $20 for $17.50 is more than 1% return, which is amazing, and I just need to hold it for one day. So let's make the trade on TD Ameritrade. Go to options. Single order. Underlying symbol is Workhorse. We look at the option chain. September 4th shows us 10 strike prices at 17.5. So you see Robinhood said that the premium would be 0.2, but you can see here that the bid ask is 0.15 and 0.25. Robinhood just averages the bid and the ask. So I'm going to put this for now, but I'm going to write my own price, and that is 0.20. Sell to open. Is that right? Sell to open, Workhorse, single order. Make sure you check these. Luckily, all brokerages will force you to review order because they know how absent-minded traders can be. Limit at $20. Trade amount, 1 contract. Sell to open, Workhorse, December 4th, 17.5 put weekly. And I get $19.35. So it's pretty good. And let's place the order. And you can see it right here. Just because you place it doesn't mean it's going to fill. Somebody has to be willing to buy it at that price that you set it at. Yeah, that's it for now. Just my one trade of the day. I made too many trades yesterday, so that's fine. I'm okay with that. I still have almost 20 positions open. I don't want to say gonna. I should be in the money for 80 or 90% of them, but because of this one really bad Tesla call, that's going to wipe out almost 50% of my profits. All of my other calls are a lot smaller, so that is my fault. That's what I get for playing such an expensive call debit spread. But at the same time, of course, I'm bound to lose one of them. It's just, it feels a little imbalanced when you take, 7 or 8 wins at, 20 to $50, and then you take one loss at $260, and it just wipes out so much work and so much research. But, that's part of the game. Please consider liking and subscribing if that was helpful. This is the best channel to not watch a professional trade, but to watch somebody just like you or just like me who's learning and trying all the different techniques and then give you my honest opinion on how they work, on how it feels. There's a lot more videos to come. Thank you so much for watching.